today since we've been talking a lot about Alex Karp recently, and since I just got a nice email from Philip with a few good links here, I think now would be a great time to dive back in and take a look at the insider transactions of Palantir. We have a link here for Alex Karp, of course, who is the main seller that we will be looking at today, and then Peter Thiel, the second biggest one, selling on the public market PLTR stock. So first for Alex Karp, Philip says here, shown are transactions above $10 million order volume, and Karp has been selling like crazy since the stock went public last year. Not really sure what that means for the company going forward. I do get the point that he built this company for 17 years and now has the chance to cash out. Not sure how many shares he holds. That would be important to know to compare to the amount he has been selling, but it's a lot of selling. The company has a market cap of $42 billion as of Friday, and since IPO, a total of $1.7 billion worth of stock has been sold. Still looks okay, but wouldn't you expect from a CEO who has the goal of making his company the most important software company in the world to hold his shares? So thank you very much for the note, Philip. I went through that as quickly as I could. I will address those points in this video as well as I can. Let's go. So before we dive into that, let's just take a look again. Many of you are aware of this by now, but I do want to, one more time, take a look at the exact definition of a direct listing, which is a process by which a company goes public by offering existing shares directly to the public. So that's the point that's important. Existing shares. They're using shares that have already been on the market, in the private market, that is. So it's cheaper than an IPO, but that's not what's important here. There is no lockup period. There was a partial lockup period for Palantir, but the idea is, for the most part, you bypass a period after an IPO during which insiders aren't allowed to sell additional shares because it's a direct listing where insiders can, for the most part, sell directly onto the market. And that's how the public is able to then buy shares of Palantir. Direct listings generally don't raise new money for a company or issue new shares. Again, that's the crucial part. It's just insiders selling existing shares to new investors, and there won't be dilution, as I said. Direct listings are generally better for well-known companies that don't necessarily need new financing or suffer from a lack of public exposure. So the takeaway I want to get across here is that Alex Karp and other insiders necessarily have to sell. Otherwise, there wouldn't be any shares to buy. They are offering the liquidity to the market, and they were, and we'll see in just one second, so that you and I could buy those shares back in September. So here we are looking at Alex Karp, and there's some other executives mixed in here, but Alex Karp selling September 30th, sale. So that was the first day of the direct listing. That's not a coincidence. There was no lockup for him. There was partial. I know we did go through a lockup period later on, which is where you'll see January, February. He's been selling throughout, and I'll get to why he's been selling so consistently and so much. That's pretty much all him right there in a little bit. Let's also take a look at the email again for some commentary on Thiel from Philip, who is taking a look at this insider trading. Thiel is another big seller who sold about $800 million worth of this stock since IPO, direct listing. Half directly in September and half in February. Again, September, the direct listing. That's how they provided liquidity to the market. Doing some quick math, he sold approximately a fourth of his holdings if he is a top 10% holder. $40 billion market cap divided by 10 is $4 billion, so Thiel sold $800 million, which is 25%. Is it too much dilution in selling from management team and founders, or is it okay they want to cash some money in after investing for 17 years? So yes, we've talked about this. I think it's very warranted for them to be able to make some sales after 17 years. They could have rushed into an IPO, done a total cash grab, but that's not what this is about. They believe in the company long term, and they're not selling all of their shares. This is by no means dumping their entire positions onto the market. This is selling at most 20 to 30% of their shares, and I'll get to why. Again, it has to do with options for Alex Karp. But Peter Thiel is much more of an investor and looking for that return on investment, running lots of LLCs and such, moving money around and trying to get the best investment and return on investment that he can. He is not as involved with the company as Alex Karp. And about that bit about dilution, this is not dilution. I know the dilution narrative is around the stock-based compensation, so that is where you need to worry about dilution taking place. So here we are looking at Peter Thiel, the director. You'll see D or I, so director or investor, I believe, selling here. Most of this is investor from the early investing, but there is a D, unless I have those letters messed up, but director sale there. Most of the rest is an investor. So again, him selling a tremendous amount. Let's see when he started. Yup, September 30th. How how else would there be shares on the market? This is all September 30th right there. And then October 1st, again, to provide shares to be able to be purchased. And then a little more on the lockup expiration. There he is selling 5 shares right there on October 5th. Everyone freak out. Everyone freak out. Actually, that was the filing, but September 30th. So for Alex Karp, here's an explanation, at least as far as I understand it. And Tom Nash has some great videos on this stuff. It goes back a little while since we haven't gotten too many updates on Palantir more recently. It looks like Palantir stock falling below $23 towards the end of the day here on July 12th. There really hasn't been any news for Palantir in the last month or so. June 18th, we haven't gotten any news in this period. That was the last press release we saw from Palantir. There may have been some other stuff here that I'm forgetting about. But really, we are in a news drought for Palantir, so I wonder when we will get some sort of, we're into Q3, let's see if we can get some news, build some momentum for the third quarter here. Every time Alex Karp executes options, he has to pay taxes, and that's part of his compensation as a director, as the CEO, as the executive in the company. He is offered options as compensation. This is totally normal. This is what all companies do. And another important point is that the tax rate is going up soon. At least that's what this current administration is planning. We don't know how much, we don't know when necessarily. So selling shares to cover taxes on options, the gains generated there, and ahead of a stock increase potentially in the future, he wants to execute these options and subsequently sell the shares before the stock increases in value, so there's not as much of a taxable event. So there's that reason, and the tax income rate could increase in the future, so he would want to sell ahead of that as well. So that's potentially why you're seeing him sell options for December ahead of time, way ahead of time. So I'll get to that in just a second. But it's worth noting that he retains the voting rights. There are Class F shares, so Alex Karp, no matter how many options he is awarded, how many shares he sells, he still retains voting rights along with the other co-founders. So he's given a mix of non-statutory options and RSUs. Non-statutory options, as Tom Nash so eloquently explained in one of his prior videos, actually can result in a reduction of the tax liability of the company, Palantir, which is actually good news for the company's financials. Not too big a deal, but definitely not something to overlook either. And RSUs, that's just pretty much stock. Before ending this video, I want to take a look at, this was the Q1 earnings call. If you remember, they actually asked, and this is a transcription by Motley Fool, so it's not entirely accurate, but someone, Jason B, asked, why does Papa Karp keep selling his shares? David Glazer answered, he said, thanks for the question. We'll refer to him as Alex here. So first off, Alex is one of our largest shareholders, but he has 2 large option grants that are expiring at the end of December. That kind of plays back into what I just said previously about him needing to execute and sell shares ahead of time, and that can't be extended. David Glazer noting here, who is the chief financial officer, if you didn't already know that. And so when he goes and executes these options, it's going to create a very, very large stock bill, that should say bill, so pretty much just taxes, just to exercise in holding shares. And as a result, we've seen tax-motivated sales as well as many corresponding exercises for shares that he will continue to hold. And even after this, he'll continue to be one of our largest shareholders. Now, that would be a little concerning if he's no longer the largest or second largest shareholder, but David Glazer saying, if you're interested in the nitty-gritty, you can check out the filings if you need to learn more. But pretty much saying here and telegraphing that he has no desire in selling all shares or anything like that, any meaningful amount. It's pretty much just for these options and for any tax liability. We've seen Elon Musk sell Tesla shares in the past, and he notes that's only for tax liability. And the last thing I want to do before I wrap up this video, I hope it's been helpful, is to confirm once again. I had another source reach out to me familiar with Alex Karp, and just like I said before in a previous video, for Alex Karp, money is not something worth pursuing for its own sake. And I know that's difficult to understand, and you might have a hard time believing it, but this is what I've been told, even given how much money he has made in the last 18 months or so with this direct listing. He very much values that. It's never been about the money for him, this person tells me. Money is just a tool. It's about executing the ideas, not building wealth for wealth's sake. So there you have it. I wanted to revisit the insider selling here, real-time insider transactions, the big ones at least, because I do think it's important for us to revisit every so often and check in, see what's going on with Alex Karp, Chief Executive Officer, as well as spread the correct information on these sorts of things. We don't want incorrect information circulating about in the community, so if I messed anything up here, please leave a comment and I will pin it in the comment section. Let's hope we get some more PLTR news soon. Until next time.